Finance and Budgeting Committee meeting for Monday, October 28th will come to order, and I would ask Janine to please call the roll.
Good afternoon, and just as a reminder to all who are in attendance, this meeting is being recorded and live streamed on the county's YouTube page. Calling the roll, Mr. Miller.
Present.
Ms. Turner.
Present.
Mr. Jones. Mr. Jones is absent at the moment. Mr. Gallagher. Mr. Shrine. Mr. Kelly.
Here.
Mr. Byrne.
Here.
There is a quorum.
Thank you very much. And item number 3 is public comment. Has anybody signed in?
No, Mr. Chair, no one is signed in.
Thank you. And item number 4 is approval of the minutes from the September 16th, 2024 meeting. Do I have a motion?
So moved.
Second.
It's been moved and seconded to approve the minutes from the September 26th, 2024 meeting. Any discussion? Hearing none. All those in favor say aye.
Aye.
Aye. Any opposed say no. Ayes have it, and the minutes are approved. Item number 5, matters referred to committee, are none. And I'd like to note for the record that Council President Jones is present with us. And item number 6 is our presentation regarding the budget preview on authorized strength and vacancy credits. So I've had some discussions with administration leaders over the last several months on this topic, and the administration intends to incorporate these concepts of authorized strength and vacancy credits into the plan for the 2025 budget when we do the adjustment. And this is a matter of some complexity, and I thought it would be useful if council members had an opportunity to hear a presentation on this topic before we start the formal budget process on November 12th. It had also been planned to hear a presentation about equity adjustments, but it turned out because of scheduling that we're going to do that as part of the overview presentation on November the 12th. I would just suggest to the administration that in preparing the program on equity adjustments, it would be very useful if HR and the PRC could work in collaboration so that we come up with a program that reflects the unified thinking of both. So with that, I would, we're ready for the presentation on authorized strength and the vacancy credits. Chief Janis.
Good afternoon, Chair Miller, members of council, Eric Janis, Chief of Staff. It's good to see you all. Authorized strength and vacancy credits, something that I had asked that our team take a look at and focus on since shortly after I got here. And I just want to give a little bit of an overview from my perspective why I think this is important and at a very high level how it works. And then I'll ask our team, Katie and Walter particularly, to come up and give a presentation. In the first weeks that I started a year ago, which was last September, October, we were in the middle of the biennium budget process. And I distinctly remember being in a meeting, I think it was my first or second week on the job, and asked a question. I said, I know we know how many employees we have. They're on a list somewhere. We have to pay them. But how many positions do we have? And it became clear through that discussion that that wasn't an easy question to answer, depending on who you asked, whether it was finance or whether it was HR or whether it was the department itself. So as I learned about how we had done the budget process here for the last several years, and as we implemented in year one of the Ronayne administration last year, I suggested that I think there's a better way to do it. And this is born from the experience that I've had in my prior positions. And I think as we explain it to you, you all will agree that it is a more thoughtful and analytical approach to how we budget. And it's basically two core concepts. And I'll explain them briefly here, and then I'll ask the team to walk through them. The first is the idea of authorized strength. And that is simply this, that there is a common understanding among all the entities within the administration and, frankly, council of the number of positions that have been approved within the organization, broken down agency by agency. So it is the number of full positions that have been approved, whether they're full or vacant, and so that we, county administration, have a common understanding with agency directors and leaders about those positions. Do they exist? Have they been authorized? Should you fill them? The second concept is this concept of vacancy credits, which Katie and Walter will walk through in a little more detail for you. But it is essentially this. It's a methodology to budget based on the simple concept that while you have an authorized strength number, you know how many positions you have. Because of vacancies, because of churns, not every position is filled all the time for the entire year. And so therefore, it doesn't make a lot of sense to appropriate that full dollar amount to that agency for the entire year. So it is a budgeting tool that allows for some level of control from OBM to manage appropriations based on the expected level of employees and positions filled. Now, what is the benefit of this to the directors? It's simple. You have a clear understanding as a director of what positions have been approved. And so you are authorized to hire up into those positions. If because you have churn and vacancies historically, we don't appropriate as much as we normally would, and you are able to fill all your positions or go past that appropriation, that's okay. We'll do an appropriation adjustment at the end of the year. But it provides you certainty on your ability to hire positions that have been created and previously filled. That also then sets a different expectation for positions that are asked to be created. And we're going to create a different process there by which we have a common conversation between the agencies, between OBM and HR on the request for a position, the justification or need for a position, and the cost of a position before a final recommendation has been made to create that position to county administration. And so we think this is a better way. I strongly believe this is a better way to do this than what we have done in previous budget cycles, whereas I understand that we have budgeted a baseline budget for the next year, the next biennium, based on a random point in time, a particular point in time, mid-year, the year before. This will have a more systematic approach and will allow clarity for our agencies in terms of their ability to hire and fill positions. So that's my overview. That's the elevator speech. That's vacancy credits and authorized strength in a couple of minutes. I'm going to stick around and be here to answer any questions if you'd like, but I will ask Katie and Walter to come up and give their presentation. Thank you.
Are there any questions before we continue? Yes, Councilman Schron.
Yes, Mr. Chief of Staff. Why don't you just say we don't need those funds as opposed to reallocating them to another department? Just say if we were over budgeted in a particular area, why don't we just say to the taxpayers that we over budgeted for that department and we don't need that, as opposed to reallocating it someplace else?
This, through the chair to the council member, this isn't about reallocation. This is about setting the budget going into the next year. And it is an appropriate dollar amount or appropriation based on a balance between the positions that have been authorized, but the normal churn or number of vacancies you have in an agency. If, hypothetically, you were to budget for every position authorized, and yet many of them may not be filled if you have an agency that has authorized 200 positions, but over the course of the year you average 180 of them filled, then you are in effect over appropriating to that agency. And so this would allow, based on a formula, based on a methodology, for those dollars to be held in reserve and therefore there is less of an incentive for agencies to spend money on other things. But if the agency is successful in filling 190 or 195 of those positions throughout the course of the year, in my example, then they would be able to do that, and we would true up their appropriation at the end of the year.
But you use the word successful as though success is determined by filling every slot, as opposed to how many slots do we really need. If we only needed 180, wouldn't that be successful as opposed to the 200?
And that's the difference, Councilmember, with authorized strength. Authorized strength is the collective discussion and decision about the number of positions needed. So actually, what has already been decided or discussed between the agency, between OBM, between HR, and ultimately the administration is we are all coming to a common understanding that in my example, 200 positions are needed.
Even though we demonstrated we could run that department with 180.
Usually it's, as you know, when we have churn, usually we are running things less than optimally.
Okay. It just seems to me we're rationalizing the 200 as opposed to understanding that the 180 was a good number, and we should we should look for efficiencies and effectiveness to use some of the tools, like we just got done spending $35 million on an ERP system that was supposed to bring us those efficiencies and effectiveness, which would, in my business acumen, would have been to reduce that headcount, because we brought in a $35 million tool to do that.
And if, Councilmember, if we in fact don't need those positions, then we have that conversation and we reduce the agency's authorized strength.
But not put it into reserves.
The cash would be in reserves, the dollar amount would be in reserves and not appropriated unless needed.
Reserves for what?
Reserves in terms of either the budget or cash reserves not appropriated until it was determined near the end of the year that a particular agency had hired closer to its authorized strength than it had historically done, and so we will appropriate the difference.
Okay, thank you.
Any other questions? So there is the important question of the vacancy credit fund and how that's going to operate, but I'm sure we'll hear more about that in the presentation.
We will. Thank you.
Okay.
Good afternoon. Katie Gallagher from the Executive Office.
Walter Parfiowitz from the Office of Budget Management.
So put together a short slideshow. Should be coming up. Yep. So Eric touched on most of this, but just a little background. We contracted with Brown & Company to help us go through all of the different funds in departments, including non-executive and boards and commissions. But just for clarity's sake, we are only for this upcoming budget using vacancy credit and authorized strength list for budgeting for the executive agencies. This is something that we'll look at this upcoming year, see how it worked, make modifications as necessary, and possibly introduce this to going forward if it works to maybe some boards and commissions. The funds that were used to pay for this study was out of transition dollars, so nothing out of the county general fund. As Eric said, so vacancy credits, just as a definition, the process designed to optimize the amount of resources appropriate for personnel. So it measures the positions left open because of turnover, hiring process, organizational change. So not all positions are filled in a current year. So we recognize that when we're trying to look at these numbers. And then the vacancy credit is determined on a 4-year average. So the last two biennium budgets. Just for make sure everyone's on the same level, so personal requisition forms that we use through HR. These are the forms that we currently use to fill positions or create positions. So currently, if you were not budgeted on pay 12 or a certain position was not budgeted on pay 12, a director would have to fill out that PRF, and they would have to bring that PRF to the 8th floor to get that position approved and to move forward. And as Eric already mentioned, the authorized strength lists, this is a list that we have gone back and forth between OBM and HR and the departmental director that we hope to keep updated every pay period to make sure that we at all times all agree on what positions are currently in the budget and on the books. And so just a couple examples. I used the clerk of courts, and on the second slide I used the executive. So if you take a look at when we went into the last biennium budget, there was 83 full-time employees for the clerk of courts office, and then going into 24-25, 79. You go to the next column. Currently, Clerk Byrd has 88 full-time employees and has already started the PRFs for 17. Typically, between the departments, we see a little bit more distribution between the PRFs and process and vacancies, but in her strength, she already has started the process as soon as she learns that she's losing somebody. So our agreed upon authorized strength between OBM, HR, and Clerk Byrd would be 105. Based upon the 4-year average of turnover, and again, this is where we're going to have to make sure that we're accounting for everything, because just post-COVID, you know, we've seen some departments a little bit more higher on that year post-COVID, and so where we have to adjust maybe for this particular 4 years, we can, but in this case, because of our high turnover, we kept that proposed vacancy credit at 7%. And so you could follow along at the bottom. When we originally went in for the 25 budget, she was expected to spend just over $6 million, but her current projections, and this includes, just for clarity, the workers' compensation chargebacks, Walter can get into if you have questions about that, the CBA adjustments after her last negotiation period, the added staff that weren't originally in there, so that's 79 to 88, and then an equity study, which we will get into at the next meeting. And so the next column, the almost 4 million, those are what the cost would be for those PRFs in process for a total projection of 8.6. And when you take the 7% vacancy credit, you minus that 606, for the total updated 25 budget is just over $8 million. So do you have any questions about that? I'll go through one more, just a little bit different.
So, yes, my question is, what happens to the $606,052 in the vacancy credit? Is that shown in the budget somewhere? Is there a line item for vacancy credits? Is that counted as a general fund expenditure? How is that handled?
I'll let Walter get into how he showed, but it is reflected in the budget.
Councilman Miller, this would be a reduction to the departmental budget. So it would be a reduction in whatever fund the budget is included in. So for example, clerk of courts, for example, is all general fund. So it would be a general fund reduction to the clerk of courts general fund budget by the $600,000+.
So this money would not show as a budget item someplace else, is that correct?
It would not, that is correct.
Okay. Any questions by my colleagues?
Council Miller, let me add that, you know, the same process would hold to the other county executive departments. So, for example, the Health and Human Services Department's same principle applies. We would reduce the levy for this as well.
Okay.
Okay, one more example for the executive office. So executive office, as you know, includes executive communication, regional collaboration, and sustainability. And so same kind of process here, going through the FTEs, but when these funds are combined together, you'll take the average of the vacancy credit between all of those different funding sources for that line. And so in this particular scenario, the vacancy was $239,000, meaning that the budget update will be actually less than originally budgeted for 2025. but same basic scenario. And so in the case of Clerk Bird, she has the 1 budget unit, and the executives 4 budget and units. You get into the sheriff's department, I think there's upwards of like 15 budget units. So you're going to get the average of all those budget units. So I just wanted to show that and reflect that.
So, to the chief, as I recall in the budget, these 4 departments are listed separately. Is that correct?
Yes, but typically when they're going through the executive budget, it's all 4 of these.
So, would that $239,000 be prorated among the 4 agencies when their individual budgets are shown?
Council Mueller, yes, they would all be prorated back to the individual accounting units listed up above.
Okay.
So I'd say one more thing to note. So we have not 100% finalized this. We want to go back with a couple departments on their authorized strength list. And so I didn't want to give guaranteed numbers, but as of right now, the total vacancy credits that we are calculating for the general fund is about this is updated as of today.
3.7.
Okay, you could just say it then.
The vacancy credits as of today, general fund portion would be about $3.7 million. The levy would be about $3 million, and the special revenue funds would be about $11.3 million.
Questions by my colleagues? So, Director, am I correct that that in the past, sometimes it's varied, but sometimes we've budgeted agencies near their authorized strength, which tends to create underspending because not all of the positions are filled, and that this process is going to be likely budgeted closer to what the actual expenditures might be, which is good because it provides a more accurate budget, but it also, there's a caveat that it doesn't create as much wiggle room to deal with unexpected things that might come up during the course of the year. Is that a correct assessment?
Councilman Miller, you are correct.
Councilman Tron.
I guess I'm still struggling with why don't we, on these 2 sheets right here, we show that there's a vacancy credit of over $800,000. I assume we're going to go through the entire budget process, and we're going to find elements where this is going to be throughout the entire budget. And so why doesn't that become the new norm for each one of these as opposed to calling these credits? It just seems like we're playing a shell game with the numbers, and when we go back to the taxpayers and ask them for funding, why don't we just readjust and say we don't need that kind of money because we found that the efficiencies of what we're doing have brought a lower cost of doing business out there, and that's what this seems to say to me. Maybe I'm missing something, but it looks as me, and on just these 2 examples right here, we're saying this is nearly close to $1 million that just on these 2 departments, that as far as how they're actually operating.
Councilman Sharon, I would just reiterate what the Chief of Staff said. I mean, this really sets our baseline for vacant positions, but then cuts it back by what the vacancy rate generally is. So we're reducing those budgets, and I believe, in essence, doing basically what you're saying.
But if I'm, no, but the difference is we're saying we're budgeting, but we're putting this into reserve funds that we already have reserve funds, by the way, as you know. By code, that was one of the very first things that this body did, was created. We're actually creating a second reserve fund. It sounds like it seems that way to me. In the actual actions out there, when the reality is we should be striving to actually reduce the cost of government, not saying what do we do to keep this, because by putting a reserve fund, you're actually keeping the cost of government at the same number. You're just putting it in a different bucket.
Councilor, if I may respond, I think we have a different set of assumptions on those positions. So, for instance, if we were to look at the HHS agencies, for instance, we know JFS has a large FTE count. They have a hard time keeping up with the positions they need to hire and fill. So we don't assume that just because those positions aren't filled in the course of the budget, that's the optimal rate by which the agency can act. We know it's not. We continue to try to hire to fill enough positions to do the work. So I think where you're coming from and where we're coming from are different assumptions about whether or not that authorized strength number is appropriate, or whether just because a department doesn't have all their FTEs filled at a particular point in time, that means they're running optimally and we shouldn't try to hire. And that's where we differ.
So we're not operating very efficiently.
We're always, Councilmember, we're always trying to operate as efficiently as we can. And we also, as a large organization, know we have a lot of churn with employees. What you're suggesting means, and this has been the challenge that I have found difficult as chief of staff, is that once a position isn't filled, or if it happens to not be filled in the middle of June, then it's no longer necessary. That's an arbitrary way to look at whether or not that's the way we're doing it now, sir. That's an arbitrary way of looking at. That's an arbitrary way of looking at whether or not that position's justified. This is different.
Yeah, I'm not suggesting that just because you have an open position that therefore you don't need it. There's a constant churn, but when we look at these year after year after year, and they're operating at a level that is yielding these, quote, reserves, then it means that the department is functioning. Whether or not it's functioning correctly is different. That's a different story. But by the same token, it has been functioning. You do have a churn, but the churn is constant. And that's not, by the way, that's not unique to any business. I'll share you my churns. Everybody has a churn. That's constant out there. It doesn't mean that the churn shouldn't mean we try to reduce and work at a more efficient, effective number. I don't ever hear that being part of the discussion when we actually allocated the money. The first initial $25 million, and then we got it up to 30, and then it went to 30 plus. We were being told, this body, that we are going to see efficiencies and effectiveness at a lower cost to do business because we had these tools. And I have not, we've heard one time, I believe this body heard one time from Public Works that they had found ways to do business more efficiently with the $35 million that we invested into the ERP system. But that was the only department that I think that ever came before this body to tell us about how they developed efficiencies by using new technology, the technology we invested in.
Well, I can't speak, sir, to whatever was promised from prior administrations with the ERP system. And that you're always still trying to do, as leaders, you're trying to find efficiencies and better ways of doing your job well. And in fact, as a follow-up discussion to the vacancy credit and authorized strength conversation I had with our team, we talked about having one-on-one conversations with directors throughout the course of 2025 to challenge them and make sure that they have the right number of positions and that those positions are being efficient and effective. But in my judgment, that's a better way to do it than have an arbitrary or random decreasing of positions just because you weren't able to fill one job at one particular point in time.
I'm not advocating that, so let's make sure we have a correct. You keep adding that as though I'm saying that. I'm not suggesting that. I'm suggesting, though, that if you have operated for years at that level, and those numbers have never been filled, then we must, to some degree, be operating efficiently or effectively. And if we spent the taxpayers' money to create this new tool, I'm not going to hold you accountable for what the previous administration did with that tool, but I am going to hold you accountable for the tool that's in your quiver right now. Use that and use it. And we're talking about using iPads and things of that nature in technology and Health and Human Services. That's got to be more efficient than sitting down there doing techniques that we've used in the past.
I don't disagree with your premise that we should always be seeking to improve operational efficiencies, and we should do it with technology, and we should do it with conversations with our directors about the right number of positions available. However, when you are saying that a department is operated for years and years and years with a decreased employee amount, it's one of two things. Either we're in agreement with that, and that's their actual authorized strength number, or we know that they need more people to do their job more effectively and efficiently, which is why there are more positions than they have people in those positions right now. That's any large organization would look at it from that perspective.
Okay, thank you.
So, Director, is the administration going to go through every executive department and calculate this 4-year average and just plug that number in as the vacancy credit? Or are there some circumstances where you decide that based on things that you know is going on in the department that's not the right number, and you would work out a different number, and if that would happen, give us some explanation of what kind of situations or what would lead the vacancy credit number to be adjusted on a flexible basis depending on circumstances.
Certainly, Council Miller. We will use the study from Don Brown's organization as our base point. But as you say, we will go through each department, and given circumstances, we will make adjustments. And just as Katie Gallagher just told me, IT is a perfect example of one of those where Andy Johnson is down a number of staff right now. So we will take those vacancies into account when we do determine what his proper vacancy factor should be. Better way of putting it.
Yeah, so, talking to Andy and having, and he could probably say it better himself, having difficulty with filling some particular positions. He's gone for a long span of time trying to fill them. And so he's going to end this year with about $900,000 excess. So, he's agreed. He said, I think this is probably a good opportunity for maybe you to increase my vacancy credit, but he's also going in with a few more position requests. But long term, we have talked about what does his department look like in 5 years from now. And so he has a plan to officially, move away from a couple different positions because of just how things have changed over time. I'll give you an example, like moving away from the different mainframes. So if the person's just using that as a job, we no longer need those jobs. So he's rolled off a few positions, but he, as technology changes, sees a couple of other things, at least 5 of them, where he thinks through attrition he would likely not be replacing those particular jobs.
So, Director, have you had a discussion with every department in conjunction with HR and have an agreement on what the authorized strength is, or are there some departments where that's still under discussion?
We've spoke to many of the departments, but there are a couple that there's particular one that has never replied to an email asking for feedback on the authorized strength, and another larger one where we'd like a little bit more interactive back and forth with them, which is scheduled Friday.
And when you come up with an authorized strength number, is that just an overall number for the department, or is it granular in detail in the sense that it says if the authorized strength number for the sheriff's office, let's say it's 1,220 and it's 500, it's 700 corrections officers and 100 deputies, and is it in that level of detail?
It is. We were laughing because you were pretty spot on with your one number. But so it is exactly granular like that. We are budgeting for a certain number of positions. And, you know, I'm not going to know this off my top of my head, but say it's 80 PSOs. Mm-hmm. And what is the average of those PSO rates? Mm-hmm. So it is going by positions and number of those positions.
Okay. Thank you. Other questions by my colleagues? Okay, I appreciate the preview discussion that gives us good information to think about going into the budget update process, and this will be an ongoing discussion. Thank you very much. Is there any miscellaneous business? The only miscellaneous business that I have is to remind everybody that the biennial budget update process starts on November 12th. It'll start in the committee of the whole before the council meeting, and then it'll continue on to the Mondays later in November. So I ask for everyone's participation and active commentary on the process. Thank you. Any other miscellaneous business? Hearing none, we stand adjourned. Thanks very much, everybody.